G'day legends and welcome back to another video. Bitcoin has been showing some short-term strength, bouncing from 100,000 back to 105k. However, the macro charts are still showing some major warning signs, which very much presents the risk of further downward corrections. In today's video, we are doing a complete macro and short-term analysis discussing exactly what these warning signs are and how the macro charts could still see a further continuation, as well as diving deep into the short-term, discussing what is happening as we speak, where Bitcoin is likely to move to, and what needs to happen for an unequivocal break of the downtrend. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump on in. So as we can see, over the past couple days, we have seen a pretty solid bounce for Bitcoin from that sell side liquidity level at 100,000 to $98,000. This is a level that we identified as a key potential reversal point many weeks ago, and a level of which is essentially the last line of support, which, if defended, will prevent Bitcoin from entering a bear market. The loss of the $198,000 subsequent support will result in major high time frame triggers activating, which historically have marked the beginning of prior bear markets. These trigger points specifically being the weekly breakdown of the 50 EMA and Gaussian channel, as well as the loss of a major long-standing horizontal level in the RSI, which is a reflection of the momentum throughout the period between 2022 and present, essentially the entirety of this macro uptrend spanning nearly 3 years. The loss of these three levels will likely result in not only the beginning of the next bear market, but an extended macro correction. And as you can see, just by the skin of our teeth, we were able to defend all three of those levels on this current weekly candle close. So yes, there is still a risk we see these major corrections, but Bitcoin is hanging on by a thread at this support. Now, we talked a lot about these major warning signs yesterday, but we're also going to talk about some new ones today, particularly the breakdown of a major uptrend on the logarithmic chart and a pattern we have seen play out at the end of the prior 2021 bull market, which appears to be happening again in 2025. Again, another bit of data which could be suggesting we are entering a bear market. Let's take a look at all of this in just a moment. We'll start on the market data. 24-hour volume up 18% here, guys. Not too massive change. Actually, we're going to refresh the page. I think it might be lagging from yesterday still. Let's take a look again. Volume, 12%, up 12%, 281 billion. So not really that much change. Liquidations were sitting closer to 310 million, down around 3%. Of that, we're very equal here between longs and shorts. That tells us over the past 24 hours, we have seen a lot of chop in the price action. Just diving into the 30-minute chart really quickly, we can see here, just in the last 24 hours, we have had a lot of chop. We had this rally moving into the weekly candle close. We had some consolidation up at that major point of resistance. We saw a correction to retest what was once resistance becomes future support. We have bounced from that level, and now we are retesting this resistance again. So we're seeing a lot of sideways chop, and this sideways chop, of course, generally results in liquidations on both ends for shorts and for longs. We'll come back and discuss what we expect in a second when we get to our short-term analysis. Moving over to the DXY, we can see here on the DXY still sitting under that 100 level. Again, while the DXY remains under 100, there is a chance we'll see some short-term recoveries for the risk asset market, for Bitcoin and the S&P 500. The big question is, though, will these short-term recoveries actually sustain? Will we see a maintained uptrend develop from these short-term recoveries to break through those prior higher highs and enter an extended macro continuation upwards, ideally breaking the 4-year cycle? Or are they just dead cat bounces after what has been a larger correction before we then see a continuation lower? That's really the big question on everyone's mind. And again, we can utilize the DXY to infer, because we know there's around a 0.7 negative correlation with the DXY and risk asset markets. We start to see the DXY break through this resistance that is going to be adding to the bear case for the risk asset market. Just as we have seen a little bit of a bounce for Bitcoin after what was a large correction into 98, some natural mean reversion, we have also seen the S&P 500 bounce a little bit here from the 50 EMA. Again, we're going to be holding the same stance. Since we have broken below 6,900, we have retested the 50 EMA. This is going to be an assumed top over here. If we break through this level, we'll be watching for continuations to 7,000. If we lose the 50 EMA, that will be the trigger for the next leg down. Between that higher high and the 50 EMA, we are neutral to bearish, meaning we are assuming this is a potential top, but we are not acting on that. We are neutral because we understand there's a possibility of a reversal and a continuation higher, but the loss of the 50 EMA will likely be when the probabilities massively shift in favor of that bearish trend and likely a further correction lower. So pay attention to that, guys. Let's go ahead and jump into Bitcoin. Like we said, we're discussing everything from the macro to the short term. We'll also be taking a look at the total cryptocurrency market cap and altcoin market cap, as we didn't check out that in our prior video. And we might also touch on Bitcoin dominance. So before we get into all of that, go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. You'll support me making the content, and you'll support yourself in your trading journey. Go ahead and sign up an exchange I use and I trust. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, I want to go ahead and start on the macro again. And I want to talk about what we talked about yesterday initially, but I also want to talk about two things we didn't discuss yesterday. Number one being a historical pattern playing out with the RSI and the bull market support band we saw just at the end of the prior 2021 bull market, which could infer that we are going to see continuations lower and a major uptrend, actually a major rising wedge pattern on the logarithmic chart, which has just broken down on the weekly, which can provide evidence of where Bitcoin will likely move to based on measured moves, but also invalidations and trigger points for what price on a horizontal scale we could expect the bearish trend to break and the bulls to start to regain some high time frame control. So a lot of information can be told from this, but let's just start by defining what is happening for the new viewers and what we are watching for. So simply put, there are a few things we're watching for. Now, the reason we are watching these levels is because historically, based on what we have seen on the macro price action through all prior cycles, the bear markets for Bitcoin have started upon the loss of a few major levels. Number one on the weekly chart was the 50 EMA and Gaussian channel upper band. We can see here, started a bear market. We can see here, started a bear market. And we can see here, started a bear market. Okay. And we are running the risk of doing that again as we are now retesting, as you can see in the weekly chart, the Gaussian channel upper band and 50 EMA. And the next one was, of course, the 2-week, okay, the 2-week Ichimoku cloud baseline. To show you this one very clearly, we're going to remove everything. I want you to look at the red line on this chart over here. We'll delete the orange lines really quickly. You can see a lot more clearly. You can see that the loss of the 2-week Ichimoku cloud baseline over here. We can see another loss over here. We can see another loss over here. All resulted in those macro downtrends starting. And if we look at where the price action is currently, we are literally touching that 2-week baseline. So we are quite literally on the edge of the cliff being the beginning of the next bear market based on historical technical data. Losing these levels would likely trigger the beginning of the bear market. Now, will we see a bear market play out as we've seen in the past, a 365-day bear market? Will we see a traditional 4-year cycle bear market? It is unsure. We don't know. The 4-year cycle may break. If we do, this is going to be the best expectation or the best trigger for us to see that. Another thing we've been watching on the weekly chart is going to be the weekly RSI. The weekly RSI is very important, as this RSI trendline has been reflecting momentum through the entirety of the last 2.5 to 3 years. More specifically, we have bounced from this low 3 times, and every single time we have bounced from the low, we have bounced from the 50 EMA, defending the 50 EMA. So we're watching for this level to be lost. If we break below this level and close a weekly below this level, it is highly likely we will be doing the same on the 50 EMA, and thus we'll be entering a higher time frame correction. We have 6 days remaining until that weekly candle closes. Let's talk about the new things that we want to be discussing. On the 2-week chart, we saw a good thing and a bad thing happen. The good thing was we were able to defend the 2-week bull market support band, okay, which is similar to the 50 EMA on the weekly, but we saw a breakdown on the RSI. The breakdown on the RSI is leading. It is suggesting that although this level was defended, we have more weakness here this time around in comparison to what we saw on the prior retests of the bull market support band. You can see the prior retests of the bull market support band. Every time we held this uptrend on the RSI, this time we have broken below. Now, this is where the new topics of discussion come into play. If we look at the prior top, we had a respective macro uptrend on the RSI, okay? We saw the low retest here, we saw another low retest here, and what did we see over here? We saw the breakdown of the RSI. I'm going to draw a vertical line in. Now, I want to draw a vertical line on this RSI too, and what you can notice is, on the breakdown of the RSI, we've still managed to hold that bull market support band, just as we have seen over here. In fact, what we saw was 2 weeks of support at the bull market support band before we then eventually saw the price action continue lower, meaning that this is still a warning sign for a potential leading correction. The only way we'd be confident that this has been eradicated would be if the RSI breaks back above this trend line, invalidating the breakdown. Until then, we may be potentially seeing this pattern play out, which is the breakdown on the RSI leading, suggesting momentum is falling. There is still some demand here at that $100,000 to $98,000 level, holding support. However, the buyers did not get back in control in this instance, resulting in an eventual continuation down, as of course that buying pressure was absorbed by sellers. In this instance, what have we seen? We've seen a correction into the bull market support band, the breakdown of the RSI suggesting momentum is falling. However, we are still seeing demand by the buyers, resulting in bounces from our sell-side liquidity. But if the buyers do not reclaim control, the buying pressure will be absorbed and we will see continuations down, just as we saw here about 2 weeks later. That is something big, guys. That is something to pay attention to. The next thing we're going to be discussing is the uptrend. We have seen a breakdown on the logarithmic chart, which is this uptrend here. Again, we can see we had a rising wedge formation from these tops in. Again, a rising wedge formation. We confirm that with at least 3 retests on one side. 1, 2, 3, and at least 2 on another side, 1, 2. We have a confirmed rising wedge pattern. What we have seen is a breakdown of the rising wedge. If we look at the measured move expectation, we take the depth of the channel, we apply it to the breakdown. That could take us as low as the Gaussian channel lower band. That, of course, is going to be around that $52,000 region. So again, if we look at our best and worst case scenarios for the Bitcoin bear market, where those targets will be, we have got this range here. This is worst case scenario, best case scenario, 52,000, worst case scenario in that $36,000 region. That $52,000 region is literally the upper band of the Gaussian channel on the 2-week chart based on the measured move of the rising channel. So we have confluence with that level of support. That is something to pay attention to, but of course there is one good thing that comes from this, and that is we can utilize this uptrend as an invalidation point, meaning if we draw a simple horizontal ray at this point, which is the weekly 2-week low. Also, it is the confluence point between the uptrend and that horizontal level. We know that by breaking and closing above 108,000 US dollars on the 2-week, we invalidate the breakdown, invalidate the rising wedge, and we potentially see continuations back upwards. That is the invalidation point. So we talked about in the beginning of the video, what is the level that the buyers will need to really reclaim to invalidate the sellers here? Well, that level has just been defined very clearly as 108,000. Now, if we take a look at the short-term price action, where is 108,000? Let's go ahead and draw a horizontal ray in. 108,000 is sitting right over here, which you can see is by no coincidence an apex point of the current downtrend on the daily chart, and of course that major daily support, a level of which we have not retested, a level of which we are showing some weakness on the short term rallying into. If we look at the 1 hour chart, you can see we are retesting / we have retested the prior change of character and break of structure level, which is a prior daily support, turn into resistance, retesting as a resistance and rejecting. So if we do not break above this 106k level, it is not even likely we're going to see 108. It is more likely we'll see continuations back down. If we break through 106, expect retests of 108 and potential rejections from 108. So I hope that sums up everything for you guys. I think, again, this is a pattern no one is really talking about. Not so much the logarithmic chart. This is kind of, more of an obvious pattern, but I think the pattern between what is happening here on the bull market support band and the RSI on the 2-week and that 2021 pattern versus what is happening currently may be something we should pay attention to. This is a bit of a coincidence really that we're seeing it play out kind of identically. So we're watching to see, we're expecting consolidation here. We're expecting sideways consolidation. And if that buying pressure doesn't come in enough to break 108, we're going to see buyers absorbed, and we're going to see a continuation lower, just as we saw over here, playing out potentially again over here. Something really interesting to pay attention to. That is more of a hidden pattern I don't think anyone is talking about. Let's take a look. Total market cap. Again, the total market cap is super simple, guys. It's such a simple chart to take a look at. I love talking about it because it's just so easy. Very simply put, while we stay under 3.65 trillion, we are not looking good. Okay, and it is likely that is the 108k resistance level that we will need to break above. Put it simply, below 3.65, the cryptocurrency market is downward facing. Above, we run the chance of reversing back up on the macro. Okay, so bearish below, bullish above. We are below, so technically that is bearish. As for the altcoin market cap, the altcoin market cap's an absolute mess. Okay, all we are watching for the altcoin market cap for the next macro leg up is going to be a breakout of this macro weekly downtrend on the RSI. You can see retest, break here, then we see continuations upwards. Now that might take ages to happen, right? It might happen a lot sooner. It might happen in years from now. Who knows when it's going to happen, but we're watching that trend line for the breakout. When it happens, we'd expect continuations. The same thing applies while we remain under that 1.04 trillion. Expect continuations into 940 billion as support, just as we have seen. We'll wrap the video up there, guys. Have a fantastic rest of your day. I'll catch you all in the next video on Thursday. I look forward to seeing you all then. Bye.